today's episode, we're going to focus on this rejection that occurred from the macro diagonal, the 8-degree macro diagonal that we tend to see across time, and we always reject from there. You can see that 2016, also 2019, upside wicking, and you can see upside wicking beyond here and a rejection as well. We're going to be talking about that in this video and a lot more. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy videos like this going forward, and let's dive right into it. This rejection, which occurred just when we saw everything go live with the ETFs, and we were talking about this a few weeks back, not very long ago actually, in fact maybe a week and a half ago, rejection occurring from here most likely. This is exactly what happened, an upside wick just like in 2019. Of course this was a pre-halving year, so we're now seeing rejection from this trend line in the halving year. Very interesting that that's happening, but generally speaking, we tend to see rejection from this macro diagonal trend line in the pre-halving months. So even in the pre-halving year, but also in the halving year before the halving. And you can see that as well in 2016, rejection just before the halving. But this all changes just after the halving, where we turn an old resistance and point of rejection into a new springboard and form of support to break us to new all-time highs approximately 200 days after the halving. This has happened also in the past when it comes to 2020, that halving year as well. 200 days after that halving, we retested this trend line and rallied to new all-time highs. So the fact that we're rejecting from here and the fact that the ETF coincided with this rejection doesn't surprise me. This is something we've been talking about for a few weeks now. So this sort of rejection here isn't out of the ordinary. We're down 15% and we've seen stronger rejections in the past. Of course, this was upside wicking and rejection into a very deep downtrend. And of course, this was the COVID fueled crash. So this still occurred even after this rejection right over here, but generally a downtrend relative to this macro trend line resistance is something to be watching out for. We tend to see lower highs in that respect, and it's this macro diagonal resistance that coincides with a multi-year resistance that we're also seeing in this cycle, and that multi-year resistance is simply the one of the 4-year cycle. In candle 4, we tend to see rejection early on in the year, but ultimately after the halving, we break beyond this multi-year resistance. That is the 4-year cycle resistance. And you can see that this is a resistance that rejects price for 1, 2, and 3 years. Not quite getting there in 2015, but very much getting there in 2019, right over here, where we saw 3 years of rejection. Still rejection prior to the halving, but you don't quite see that on this chart, but breaking to new all-time highs and actually breaking beyond that resistance. In this cycle, we broke to new all-time highs. However, in the previous one, we didn't break to new all-time highs, but the most important takeaway is that we broke this 4-year cycle resistance in candle 4. So that tends to happen in every 4-year cycle, and it will be the case also in this candle 4 as well. And the candle 4 we're talking about is this halving year right over here. And you can see that this is a rejection from approximately 46K. So with time, because this is a 3-year resistance in this 4-year cycle, with time we'll break comfortably beyond 46K. However, for the time being, we're just rejecting from here. And that tends to be the case before the halving. And it was a case in this candle 4, and this is better illustrated here. In this candle 4, we were rejecting there as well. In this candle 4, we were also rejecting from there. But in the context of the macro and the 12-month time frame, we don't see that initial rejection. Over time, we just break beyond there. So this is very short term, and the fact that we're rejecting from this 4-year cycle resistance is no coincidence that we're also seeing 46K be marked by this macro diagonal resistance, because simply put, if you were to plot this, a trend line right over here, a lower high trend line, then this is generally that lower high trend line that's going to be that point of rejection. And we always see a lower high trend line across cycles, whether we revisit there or not. Sometimes doesn't happen in the 12-month view, but this is better illustrated right over here, that upside wicks do tend to occur we're seeing history repeat in that respect, and it's occurring just before the halving event. So you can still see that, for instance, this yielded some downside, and many are going to jump at the opportunity and say this was pandemic fueled, and they're definitely right in that respect. But we didn't see a pandemic in 2016, and yet we saw rejection from the trend line into a pre-halving retrace. So that's still very much a possibility, and it's not about comparing this with the pandemic, but it's about just comparing this pre-halving period where we are in the cycle right now, just 100 days shy from the halving, and comparing that to each similar point in the cycle. And you can see how this retrace, for instance, occurred around the halving. So at this same point in the cycle, we were still reaccumulating in 2015, 2016, and only broke out to new highs later on in the cycle, getting closer to the halving. At this same point in the cycle, this is where we were rejecting. And we were rejecting here regardless of the pandemic. But then in the month that followed, this pandemic indeed did occur, and we saw a flash crash. However, if we didn't see a pandemic in this month right over here, but we saw one in the following month. So still we were rejecting here without that pandemic, and we're rejecting from this trend line once again, and maybe some sort of negative catalyst could come in to support that rejection and see additional downside continuation. That's what the technicals are saying, and if a catalyst is going to come in, it wouldn't be a coincidence. And it does look like we're going to get a rejection from this trend line and see a bit more deeper downside. So don't be surprised if a catalyst somehow manages to appear in the coming days, weeks, or even couple of months. But the fact that this ETF catalyst has come to fruition at this macro diagonal is no coincidence. And around the halving, it won't be a coincidence for us to also see some downside just after the halving, but even before the halving event. And this occurred in 2016, but also we tend to see after that downside reaccumulation in the months following the halving. This tends to be the case before we break out once again, and that breakout from the reaccumulation range simply is all about reclaiming this macro diagonal resistance. And just notice how 46k is that point of rejection here, but around 200 days after the halving, if we continue to retest this level as a support, 41k is going to be that point of retesting that macro diagonal. But just notice how we're still going to be below the macro diagonal after the halving. We'll still be below that macro diagonal for a few months after the halving. Just notice how maybe it was 1 month, 1.5 months below the diagonal here. Here it was 1, 2, 3, 4 months that we were below the diagonal. What if we are also 1 month or a month and a half or 2 months or 3 months below this macro diagonal? That would mean that we're going to be below 41k for a few months after the halving. But historically, a rejection should occur here, some sort of pullback, a pre-halving rally beginning in mid-February perhaps, 2 months before the halving, before maybe rejecting once again from this macro diagonal resistance, before beginning that pre-halving retrace, then landing into a reaccumulation range that could last several weeks, maybe a couple of months, before breaking beyond here, pulling back to retest that macro diagonal as a new support, and then springboarding back to revisit these old all-time highs, but ultimately breaking beyond there and rallying into price discovery. That's about it for today's video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this content going forward, and thank you so much for tuning in. Check out the top right hand corner video for more. I'm Rekt Capital, and I'll speak to you in the next one.